Jeremy Grantham predicts market collapse. No one knows the stock market like Jeremy Grantham. The co-founder and chief investment strategist of GMO has accurately predicted some of the biggest crashes in history. And now, he's saying that the markets are due for a collapse and a melt-up is looming in the near future. So what does this mean for you and investors? This is definitely something you don't want to miss. Prepare yourself for an exciting experience with the latest predictions from a veteran investor. Let's start off with Jeremy Grantham's prediction for the markets. In this video, we're going to be discussing Jeremy Grantham's predictions for the markets. For those of you who don't know, Grantham is a world-renowned investor who has a pretty epic track record when it comes to predicting market behavior. So what does he think is in store for us in the near future? Grantham believes that we're in for a melt-up in the stock market, followed by a sharp decline. He believes that this melt-up will be driven by easy monetary policy from central banks, as well as by investors who are chasing performance. This could result in a bubble in asset prices, which would eventually lead to a sharp correction. While it's impossible to predict the future with 100% accuracy, Grantham has a strong track record of making accurate predictions about the markets. Now, if you want to ensure that your investments in Bitcoin stay safe in these turbulent times, you won't wish to skip veteran investors' prediction about Bitcoin's future. The future of Bitcoin. Bitcoin has been one of the hottest investments in recent years, attracting a range of investors from tech-savvy millennials to established financial institutions. But what does the future hold for Bitcoin? According to Jeremy Grantham, a legendary investor who correctly predicted the dot-com bubble and the housing market crash, Bitcoin is headed for a fall. In a recent interview, Grantham compared Bitcoin to earlier speculative manias like the South Sea bubble and tulip mania, and warned that the current craze is unlikely to end well. While Grantham's predictions should always be taken with a grain of salt, his bearishness on Bitcoin is shared by several other respected investors. These warnings from Grantham and others suggest that the current craze around Bitcoin is likely to end badly for many investors. Those who are thinking of buying Bitcoin should be aware of the risks involved and should only invest what they can afford to lose. So why does Grantham believe that a melt-up and subsequent crash are on the horizon? In October 2019, Grantham predicted that markets would experience a melt-up in 2020, followed by a meltdown. In other words, he forecast that there would be a period of exuberant growth, followed by a sharp decline. So what caused Grantham to make this grim prediction? For starters, Grantham pointed to the fact that markets have been artificially inflated in recent years by easy money policies from central banks. This has led to what he now calls a super bubble in asset prices, which is now showing signs of cracking. Additionally, Grantham believes that we are currently in the late stages of an economic cycle, which typically leads to increased speculation and risk-taking. As a result, he believes that the market is ripe for a major correction. Of course, only time will tell if Grantham's prediction comes true. However, his reasoning provides food for thought for investors who may be wondering if now is the time to take profits and move to the sidelines. How will it affect investors and the economy as a whole? If Grantham is correct and the market does crash, it would have a devastating effect on the economy. Investors would lose billions of dollars, and the resulting turmoil could cause a recession. The stock market is already volatile, and a crash would only make things worse. Many businesses would go bankrupt, and unemployment would likely rise. The housing market would also be affected as people would be unable to sell their homes for a profit. In short, a market crash would have wide-reaching and negative consequences for both investors and the economy as a whole. So if you want to avoid the devastating market crash, don't miss out on the upcoming investment advice. Protecting yourself from potential market crash. While Grantham's prediction may be unsettling, there are steps that investors can take to protect themselves in the event of a market crash. First and foremost, it's important to have a diversified portfolio with a mix of stocks, bonds, and cash. This can help cushion the blow if certain sectors or assets take a hit. It's also wise to have an emergency fund for unexpected expenses and downturns in the market. Additionally, investors should be cautious about chasing performance and avoid overinvesting in risky assets. As always, it's important to stay informed and keep an eye on market trends, being ready to make adjustments as necessary. Grantham's prediction serves as a reminder that we are not immune to market crashes and downturns. By being prepared and staying diligent, investors can protect themselves during difficult times in the markets. The summary is, Grantham predicts that the stock market will experience a melt-up followed by a crash. This could be due to easy monetary policy and investors chasing performance. If this does occur, it would have negative impacts on the economy and individual investors. However, by diversifying portfolios and staying informed, investors can take steps to protect themselves from potential market downturns. Thanks for watching. If you found the video worth your time, then don't hesitate to like and share it in your circle.